Hello and welcome to our Friday edition of CMS Forex News. I'm market analyst Nick Nassad. Today is November 21st, 2008. Yesterday, we saw global stocks face a rather steep sell-off, especially at the end of the U.S. session. Today's trading saw a reversal to those sentiments as the end of the week saw Japanese stocks rise, with the main index up 2.7% and shares up in Sydney as well. The increased risk appetite, or perhaps pairing of yesterday's losses, helped the Aussie-Yen pair rebound 300 pips from its low near 57 to probe the area around the 60 level. In the Eurozone, manufacturing activity along with activity in services was shown to contract in November at the fastest pace in at least a decade. The manufacturing PMI sunk to 36.2, while the services PMI slipped lower to 43.3. The Eurozone economy fell into its first recession in 15 years in the third quarter, which was brought about by high lending costs, weak exports, and restrained consumer spending. The data puts more pressure on the ECB to continue and perhaps accelerate their pace of interest rate reductions in order to jumpstart the Eurozone economy. Looking at the Euro-Yen pair, the Eurozone PMI data coincided with a peak in a 350 pip overnight rally on the back of increased risk appetite. The pair turned back around the 120.40 area and then consolidated in a slightly downward channel. For the week, the euro is down around 400 pips as it broke below the 120.40 level midweek, and that level has now turned into resistance. Stocks in the U.S. battled back and forth, though they staged a strong rally in the last hour prior to the close, as information about President-elect Obama's potential Treasury Secretary pick hit the newswires. The euro-pound pair fell to a low of 0.8370 following the release of the Eurozone data, but managed to stage a rally as pound weakness kicked in during New York trading. The euro rose to test the 0.85 level, a 130 pip move from the intraday low. This reverses the price action seen at the beginning of the week that had favored the pound. Similarly, the pound-dollar pair fell back near its global open after a 300 pip rally overnight stalled at the 1.5060 level. The pound gained on expectations that a more aggressive interest rate cutting campaign by the Bank of England can help to get the economy out of recession faster. The pair reached 1.525 on Wednesday prior to the sell-off in global stocks seen yesterday. In Canada, consumer prices eased faster than expected in October, with the monthly rate down 1%, the sharpest drop in the monthly rate in nearly 50 years. The fall was primarily driven by a fall in the price of gasoline. The 1% drop in the monthly rate helped cool the annual rate to 2.6% from 3.4% in September, the lowest reading since May. Core CPI, which strips out volatile components including energy and some food prices, was down 0.2% on the month, showing a filtering down of the headline data into other goods. With inflation receding, Canadian officials can move to lower interest rates in order to help a beleaguered economy. Rates are currently at 2.25%, the lowest they've been in 4 years. The US dollar-Canadian dollar pair fell after reaching an intraday high at the 1.2980 level, which was a major level of resistance from late October. The pair slid 250 pips to test the 1.2750 area before the momentum swung back in the greenback's favor. The pair had started the week at 1.2320, a change of about 550 pips. The late gains in U.S. stocks helped give the loonie one final surge before trading closed for the weekend. Next Monday starts with business climate data from Germany, industrial production from the Eurozone, and existing home sales from the U.S. Tuesday sees the second release of third quarter U.S. GDP, while Canada reveals its retail sales. And that wraps up another week in the Forex markets. Thank you very much for joining us here at CMSFX.com, and we hope to see you next week. Have a great weekend.